Now friends, come to this particular chapter, IFSC, okay, unit in International Financial Service Center, okay. Now see, just like similar to a SAES, okay, in India there is a, the government intends to set up a financial service like, for example, International Stock Exchange, okay, something similar to where the international securities can be listed, international bonds can be listed, and the trading of bonds which can take place in India. India intends to set up an international financial service center, okay, basically like international stock exchange and the bond market, okay. So if there is any unit which is set up as per the provisions of this chapter, okay, we call it as a unit in IFSC, okay, then this particular unit in an IFSC is given a huge benefit, a huge incentive, okay, from the taxation point of view, okay, because government wants to promote and they wants the foreign investors to trade in India, okay, this is what they want actually. So this unit is given a lot of tax advantages and the tax benefits, okay. One of the first and the most major benefit is section 80LA, which is straight away the deduction for 10 years. 100% of the income is given a chapter 6A deduction, that basically this unit will not have to pay any taxes in India. 100% deduction has been provided here, okay, so of the entire income. So a huge benefit for this particular units in India. Moreover, this particular unit, when they do business in India, they also make various of payments like interest to non-residents, okay. They also make payment of some aircraft related transactions to someone else. When these units do business and they deal with the foreign, because most of the people likely to trade here are going to be non-residents, okay, or government intends to do that international transactions, so by and large they will be non-residents or the foreign people, okay. So when this unit makes payment to those people, because they are going to do transactions in India now, okay, those people are also given various of exemptions, okay, when they do transactions here, okay. Not only this unit may also do lot of transactions with respect to the listed securities, okay, in the IFSC, logically the foreign securities, like for example Indian ADRs are listed abroad, okay, of the Indian companies. That way they want, the government wants that the foreign companies ADR also may get listed in India, okay, through this IFSC, or the foreign securities gets listed here in India through IFSC, and the trading takes place in India. So even those securities transactions, whatever takes place into IFSC, even those listed security transactions are given a lot of exemptions, under section 10. So basically it is some sort of financial center in India, physically in India, but something like logically like a foreign unit, okay. So logically it is given a lot of tax benefits, like for example as if it is not into India, something like that, okay. So that sort of provisions have been built into here, okay. So first of all friends, I will take you to the main provisions, but small there are many provisions which can easily be referred, so that way it is not so difficult. But see, okay, the main first part is section 80LA, okay. Section 80LA is divided into two parts, subclause 1 and subclause 1A, okay. Subclause 1A is with respect to a unit of International Financial Service Center, okay. So our main focus is here, that where a gross total income of assessee, which is a unit of International Financial Service Center. Now let me tell you, here they are using the word unit. Basically this can be any assessee type. This assessee type can also be Indian company, can also be foreign company. So it is a unit which has been provided here, okay. And straight away you are given a 100%, that means a total deduction, okay, for 10 years, okay, which has been provided out of the 15 years. So logically out of first 15 years, okay, you select whichever 10 consecutive years you want. logically, you know what happens that in the initial year you are setting up, but you are not making profits. So when you are not making profit, it doesn't make any sense to you know, take the deduction, because deduction will be valuable and important only when you have income for which you want the deduction. So supposing logically you start turning yourself into profit from the 4th year, suppose, so then you will start from the 4th year and 10 year, total 10 years. Okay, so total 10 years deduction you will get, but you will begin your deduction from the 4th year in my example. So 10 out of 15 years, that way it is said. Okay, 10 out of 15 years, but which 10 consecutive years? It is not like you can select any year. 10 consecutive years, that is basically when do you want to start claiming the deduction, you can take the call. Okay, now subclause 1 is not with respect to unit in IFSC, but this is basically with respect to the offshore banking in special economic zone. Okay, so this is basically offshore banking unit. Okay, which is basically, you can say, a foreign bank. Okay, but in the special economic zone. Okay, so here the specified SSE being a scheduled bank or the bank incorporated under laws country outside India. So scheduled bank or a foreign bank, basically offshore banking unit, having a unit in special economic zone, then you are given again a similar type of a very huge benefit, 100% for 5 years, then for later 5 years 50%, but now 50% is upgraded from this year to 100%. Okay, so this is upgraded. So basically you get first 5 years 100%, okay, and later 5 years 100%. Okay, so logically you get, when you satisfy the conditions for 10 years you get 100% deduction. That way you can say when you satisfy these conditions. Okay, so ATLA is one of the huge benefit, okay, which is basically 10 years advantage. That way you can say. Now the incomes covered by this particular clause, that way out of your activities, whatever the income that you get will be your income covered and subjected to the deduction under this particular clause. But one of the very valuable point that I want to bring, because government also wants to promote any transfer of the asset being aircrafts or a ship. Okay, basically this is also a very big industry where huge monies are involved here. So where there is any transfer of an asset being aircrafts or a ship, okay, which was being leased under this particular clause subject to the other conditions. Okay, so transactions of aircrafts and the ship is also covered by this particular provisions, and you will be eligible for the purpose of 100% deduction, okay, for this particular type of income. Now friends, some of the other relevant provisions, let me just bring it to your notice. Okay, now a unit in an IFSC, right now we are discussing all about unit in an IFSC. We are not talking about the investors into IFSC right now. We are only talking about unit, okay, where this particular unit, okay, if it is coming under these MAT provisions, okay, so you have this IFSC where income is solely out of the convertible foreign exchange, and if you have supposing the MAT provisions being applicable, okay, then the MAT rate is a concessional rate which is provided, that is 9%. Okay, if you are not a corporate entity, but if you are subjected to alternate minimum tax, for example, for them also it is a concessional rate which is provided under 115 JC provisions, that is 9%, but here everywhere the condition is derives income solely out of the convertible foreign exchange. So logically here the unit, because the setting up of the unit is only such that it has to be in the convertible foreign exchange, but anyway the law makes the things absolutely and abundantly clear. Okay, so here there is a concession which has been provided if you are covered by MAT or you are covered by alternate minimum tax. Okay, further, under 115A provisions, where the special rate of tax is there, if there is any dividend which is received from a unit in an international financial service center, okay, so dividend, so this particular unit in an IFSC is paying any dividends, okay, which is covered by, of course, 115A provisions, the special rate of tax. So basically you can say non-resident or foreign company logically. Okay, so if they get the dividend, then there is a concessional rate of taxation which is provided, that is 10%. Okay, further, under 115A provisions, if you have any specified income which is a special rate of tax, okay, in that particular case you will get 80 LA deduction. Okay, so for this is the restrictions with respect to chapter 6A and the other deduction. Okay, so where there is any restrictions with respect to deductions, if at all any provided, for that the relaxation has been provided, that nothing contained in this clause will apply with respect to a unit in the International Financial Service Center which is eligible for 80 LA. Okay, so these particular units will get special benefits with respect to the income computation in this situation. Okay, further, if there is any entity which is covered by BAA, the special rate of tax, okay, so these particular units are also given a special benefit. That see, normally specified exemption deductions are not available to these entities which are covered by 115 BAB, BSc, etc. type of provisions. Okay, but it makes it very clear that deduction of 80 LA will be available to such unit. Okay, so even if you are covered by special rate of tax, the deduction under 80 LA is intact with you. So 80 LA deduction. So ideally your normal 80 LA deduction, whereby which your total income comes to nil, where of course you don't have other incomes and all that. So when you have these specified incomes, then you will be getting full deduction. Okay, 115 BSc also similar provisions, 80 LA provisions will be available. So all the relevant extracts, BAD provisions also. Okay, deduction under section 80 LA will be available. Okay, 80 LA provisions will be available. So that way variety of the benefits have been provided. Okay, so this is with respect to all the provisions with respect to a unit in IFSC. Okay, now see the other part of it, but that other part is very small things, but I'll tell you the highlights of the main things, and when we solve the question things will become even more clear. Okay, so basically a unit in an IFSC, okay, is given a lot of tax benefits. Okay, now when this unit makes the payment to non-residents, okay, either the concessional rates have been provided, okay, or when non-residents trade into this particular unit and make some profits, like a trading profits, okay, again it is given a lot of benefits under different sections. So these non-residents who deal with this particular unit and gets certain incomes, of course the specified ones, not all the ones, but there's a big list of the transactions here, that these non-residents are also given the various of exemptions under section 10. Okay, so let's not go into all the small provisions, but the variety of these provisions, okay, that I will discuss it with the help of the questions. Small, quite a good number of provisions are already there. Now friends, come to this particular question with respect to a unit in IFSC. Okay, now this is a company registered in Switzerland. Basically it's a foreign company, and this particular company has one of its unit located in IFSC, and all other approvals and all that they have already taken. Okay, now first of all we will discuss everything about IFSC. So we will not talk about its investors and other. It is deriving income solely into convertible foreign exchange. Very good clarification. One of the out of the current year income, it has distributed dividends, and one of the shareholder, Mr. X, non-resident, has got some dividend income, but that investors discussion we will do afterwards. Okay, now we are required to discuss tax in the hands of the company and its shareholders. Conversion rate shall be taken as 70. Okay, income amount of IFSC. Okay, so that is covered, full 80 LA you will get it. Royalty payment, so this is basically like an expenditure for the use of the aircrafts. Interest paid, the money is borrowed to Mr. A, this is also like an expenditure, everything is in the foreign currency. So this is expenditure, because net income will be eligible for the purpose of 100% 80 LA deduction. Income from transfer of aircraft or leased by the unit, okay, this is my income, and this transfer of aircraft is already covered by section 80 LA, I have already shown it to you. Okay, so your income, this is your expense, this is your expense. Okay, calculate the net income. Okay, and net income in the first situation you are basically a foreign company. Okay, so you will be eligible for the purpose of 80 LA deduction first of all. Okay, and you will be subjected to the MAT provisions. Okay, so MAT provisions you will have to do the computation, and here actually the book profits and all that, the details have not been given to us. So I will assume that my gross total income is my book income. Okay, that I will just do the assumption and do the MAT calculation, and there is a concession given in terms of the MAT rate also, that I have already explained that to you, and apply the applicable surcharge in the cess and get the amount of the tax liability in the first instance.